It is Microsoft and Meta Day. We have non-Mag 7 names that are reporting last night and this morning. Our bonds at a breaking point as we see a surprise attack out of Iran. I've got Olivia Vaz here in just a second. I'm bringing on Andrew a little bit after that. It is going to be an action-packed show. So with that, let's roll some credits, Amin. Good morning, everybody. I am Mark Sebastian. I am your only option. Welcome to the State of the Market Show. We are live every day at 10 a.m. And a reminder, Garrett, myself, Andrew, we're going to be live today at 2 p.m. for the Fed. Now, we've got a great show ahead of you. But before I can go to the show, I've got a trade on in wiretaps called a dark wire. This is when we don't see our shadow traders in. Now, my dark wire went off on Monday. I put traders into the SQQ August 7th, 46 calls. They're up about 30, 40% right now. And we have the Fed coming later in the day. This is one of those where, do I think it can make me more money? Probably. But is it a great idea to take a winning position into the Federal Reserve that is reliant on that tracks to the triple Q? What do you guys think? One, type in one if you think I should sell, and two, if you think I should let my wiretap members know that I am selling out of this position. What do you guys think? What do you think, Amin? Should I close it or should I, ride it through the Fed?
Is this related to that thing you always say about the earnings?
You know what? It is quite related to that, Amin. Look at you listening and learning. You're gonna be a trader yet, my friend. Yeah. I mean, the overwhelming answer is one, I should close. Do you think they're correct?
Yeah.
Yeah, you're right. They are. So if you're in wiretap, I have just put out a close. Not going to be an absolute home run, but it's a win, and we don't have to deal with the Fed. That's what we want here, guys. So wiretappers, congratulations, and way to go. I'm Vaz pretty happy as well. So, all right, now that I've got that out of the way and I've closed the position for a win, let's get down to business. As we open the markets, the S&P is down 45 points, a little over 0.6%. It is at Leisha's support line, 73.83. It's actually below that right now, trading 73.80. So we're at that support level, and it continues to fall. The Qs, they're kind of they're down, but not down like the Dow. The Qs are the NDX is down about 0.9%, and really falling out of bed. And you've got the Dow down 1.4%, and the Russell 2000 down about 7/8. Now, one of the themes that we've been seeing has been sector rotation. How is RSP looking? Again, it's our winner. RSP is down 0.25%. Look at the rest of the indexes. So we continue to see money rotating. Where is it rotating? It's rotating out of mega cap, rotating out of semis. and it's rotating into safety plays. We had a couple of big earnings last night. These are non-Mag 7 names. The first I want to talk about is Visa. Visa currently about a little bit up from where it was. Now, why was I interested in that? Because we all hear about altcoins and Tether and stablecoin and all these different ways that people are going to pay. And Visa came out and said, you know what? Not going to be a problem for us. They tried to sell it yesterday, but it is being bought today. And then the other name that came out that I was watching real closely, Procter & Gamble. Now, it is down. But take a look at the move Procter & Gamble has had leading into these earnings. Pretty nice run from 130 all the way to a high of 150, down a little bit, but immediately being bought. Why? There's demand on defensive plays. There is demand on defensive plays. And then we have the Iran war that hit, right? Surprise attack last night. Now, thankfully, we were able to thwart that attack. But crude oil bouncing right back. It's up to almost $85 a barrel. Has had a nice it's kind of sitting. I keep telling you, I think equilibrium lies between 75 and $85 a barrel. Maybe a little bit toward the lower side, 75, 80. And again, I continue to think that's where we're going to land. But crude rallying is going to be a problem for bonds. And we are going to talk about this more in a little second. But, the bond market looks terrible as we head into the Fed. And that, my friends, should scare you, because the bond market falling apart brings the whole market down with us. Pretty interesting. All right. Now, we're going to bring Vaz in here in 1 second, but I just want to talk to you briefly about what Vaz and I are going to talk about. I think we have to go back to 2007 for the last time that we had an idea. We had no idea what the Fed was going to do. Market right now betting about 64% odds that we're not going to get a hike this afternoon. 35%, 36% that we are going to get a hike. Let me reiterate this. It has been almost 20 years since I have seen this kind of uncertainty. Whether we get a hike or no hike, there's going to be a repricing. Right? This 35%, if there's no hike, has to get into this 64%. That could give us a lift. Now, the Fed could take that away with forecasting lots of rate hikes ahead. And then if there is a hike, this 64% no hike needs to get repriced into a hike. This is going to be the biggest Fed move that we've seen in quite some time. The ramifications here, and I want to look at the SPX here. The ramifications here, market is looking for a 111-point move. A little over 1.5%. I think we're going to get a minimum of 2%. We're going to have Andrew back on at the end of the show to kind of talk more about how we can attack this. But before we do that, let's bring in our Pharaoh of the Fibonacci, your favorite volume profile trader. She is the one, the only, Olivia Voznenko, but we call her Vaz. Good morning, Vaz. How are you?
Hi, guys. What's up?
It's a day. I closed out the wiretap trade. Everybody
Okay.
made some money. I feel pretty good about that.
Mm-hmm.
I'm happy for them. I want to
I
see our
did.
traders win. Yes.
Thanks for making me 3K.
Gotta love it. All right, so Vaz,
I
couple
love being
things.
a member of your service. That's the best. I'm a member for the first time of something.
There you go. And we love having you be a member.
Okay, let's go.
Yeah. So Vaz, you heard me at the top. You heard me kind of intro you, right? This is the most uncertain that we've seen the Fed since you were in high school.
It's true.
Yeah, you were a junior. You were like working on your driver's license, driving around the Parkway of New Jersey's, and the Fed. We're uncertain about the Fed, but now we're not, right? Looking at spot, looking at Q, I think we could get a more than 2% move. What are you watching in terms of your charts for places to trade ahead of the Fed and the type of move we could see after the Fed? You heard me say the straddle is pricing in for SPY about $11. What levels what are you watching for this morning?
Yeah, so we'll first look at the 5-minute because I think that is, going to be the most imminent trade. We just took out a multi-day floor, which is right around 736.20, like right around here. So we just took that out. This morning on the way to that, beautiful bear flags, just all the way down. So you have bear symmetry into this move. Now, the Fed is not until 2 p.m. today, and then the market just goes wild after that with commentary, etc. So following this, the next move lower would be 734.86, like right around here. And then we'll look for another 1 or 2 points. I'm looking at SPY right now. So I feel like, the general market looks weak. I'll follow SPY for the FOMC story for just for the sake of it, but also looking at the QQQ, the floor I'm looking at is basically from yesterday. Yesterday's low is 668, breaking that and just eyeballing this. And we're probably going to find a little bit of a hesitation here. 664, 663 would be my downside target for those. There's obviously a broader story happening. The more that we watch this, it's like the puzzle, the pieces were out there and the puzzle is now coming together where there was obviously fears. I mean, you could look at, people were talking about this if you were just looking, you could have found the information that there's obviously been a big AI concern, the AI bubble, but looking into that, it's like, why is there an AI bubble? It's not just about, the hype of it. There were some serious concerns of competition, and you're starting to see that. I know you guys kind of nerded out talking about this earlier, but you were seeing that in 2024 and 2025 if you just looked. And we've been talking about how the market just abruptly stopped in late 2025 and into 2026. You had Iran, the drama of that, just like take the market, a fragile market. You were able to take that market down, and then with that being solved, I say this like this, with that being solved, you had a parabolic move higher. And I think that we have just stopped again, just like we did in 2025, because this move was just completely separate from what was really concerning the general market. And now we're back. We've already broken down, everyone. Like, if you are on Twitter right now and you see anyone say, oh, no, this is just a consolidation. It's not a consolidation anymore, homies. This has broken down. We officially broke down on a non-catalyst because the Korea story is now out and about, but we were already breaking down before that. So you have big tech earnings coming today. You have FOMC. Guys, if you want to go on a bender, you have 48 hours to do it because this market is not for the faint of heart to trade. You can come back, wake up on Friday or Monday if you want to really go into it and see where we're going to be, because this thing still has a huge way to go, Mark. I mean, we're about to hit the 150, 664.36. You have a huge thin zone in your volume profile because this was a parabolic Fugazi move. So that's why you have lack of volume here. And that lack of volume is going to be a falling knife. I mean, we could see the Qs hit like 633.
Oh, wow.
I'm not kidding, man.
633, that would be a 5% drop. That's a pretty good move.
What we need is a gap. We need a gap. And that gap can come on tonight. It can come during earnings. If we don't get a gap and we just kind of sit here, we'll have to wait for another catalyst. It might be a positive catalyst to raise this higher. But we have not even seen capitulation yet. Like, you know, we've had a couple gaps, but you need the capitulatory candle to gap and then gap lower. And we certainly are setting up for that. I was waiting for that back here during Iran, but why didn't we get that? Because it was the problem that happened here was solved here. This problem has not been solved. And, you know, we're just waiting for that event. It's almost like this coming to Jesus moment I'm having. It's crazy.
Yeah, I mean, if you want to, Vaz, here's a really inexpensive way to kind of defend your portfolio, and or take a long shot at, hey, Fed raises rates, market completely rolls over. What if I told you you could go to this Friday and we look at the 644 put that costs $1.85, and we sold the we bought the 643 put. So it's out of the money. The 643 put is going to cost me about $1.70. I sell the 633 put against it. I now have an 11-point vertical. I paid less than $1 for that. And if the market completely collapses, I'm going to absolutely clean up on that. It's a little bit of a lotto ticket, but it's also a very nice hedge against FOMC. And then pivoting to kind of the next topic I want to hit on you with, we have the 4 mega caps reporting: Meta, Microsoft, Amazon, and Apple over the next couple of days. I know Qs are falling out of bed right now as we speak. Are there any of those earnings that are interesting to you? Any of those that you're specifically targeting or looking for an out of bounds move?
No, I need to see. I just need, again, Mark, we still don't really understand what's happening. We understand what's happening. We don't understand why it's happening and what does the market, what is it front running? What is it afraid of right now? There's a lot of catalysts floating around. We need to know, what is it? If we have in the next slew of earnings, we have Apple, I'm actually not really worried about. I'm more concerned on Meta, Amazon, and Microsoft.
Mm-hmm.
I want to see how traders react, because if, let's say, these earnings, blow the doors off and we have a non-reaction, kind of like Intel didn't really do anything. Google was a first glimpse, that gap down. Intel, kind of sleepy. Even though some can argue they reported good earnings. If a stock if a company reports good earnings and it kind of just goes sideways, that's usually because the market's putting pressure on it. It's not in an environment where it can thrive and breathe. So if we have decent earnings out of these guys and they go nowhere and or gap down, that is still bearish to me. Obviously, a gap down is bearish, but even if they go flat, maybe a little up and then sell off immediately the next day, that is the market showing us that it's not tech. Maybe it's something, maybe it was FOMC or whatever the case is. So I have to see what the earnings reaction is with those. If it's a gap down on all of those stocks and it brings the market lower, then obviously whatever they said is what this concern was. I have to see the reaction.
I'm with you. All right.
Yeah.
Last question for you. And I think this is a good one. So you run Game Plan, super successful, right? Every gamer loves it, right? Because you give them your zones. When a call enters the zone, you buy it. When it completes the zone, you sell it, you make money. When a put enters its zone, you buy it. When it completes the zone, you sell it. But obviously, we've got FOMC, we've got all these earnings. It's been choppy and a little wild. How do you work with your gamers? And I know you're testing QQQ as well. Stay tuned for that, folks. How do you what kind of words of wisdom do you tell your gamers when they're in that room?
There are some days that are going to be high risk, but we're traders and we know what we're getting ourselves into. So if I see great setups, which this week I know, call me crazy, we have shorted the market both Monday and Tuesday. So I prepare my gamers by saying, look, this is what I'm doing. These are the zones I'm trading. This is obviously a high risk trade. This is a high risk week. So put your war paint on if you want to trade along with me. And this is what I'm doing. If it's not for you, wait it out. Let the market find its catalyst. And whether that catalyst is to take the market lower or higher, or at least just like find some sort of trend here, that's when we put a little makeup remover on and we can have it like a little easier, less choppy, because the market is very sensitive right now to anything. Like the general market is obviously weak, but then you can have, Trump tweet that, hey, we have a deal with China now or whatever, or we're friends. And then you get those like algo bombs on the tape and it can kind of knock you around. So that's why I say this week, put the war paint on, because there's so many conflicting factors, but it doesn't mean you can't trade. Just know what you're getting into.
There you
really
go.
Yeah.
And adjust sizes down a little bit, because, in a normal market, maybe we get a 50-cent move. So if I trade $1,000 in that trade, I'm going to make $500. In a market like we have, we're getting bigger moves. So you can make that $500 with less dollars, right? Maybe I can put $300 into a trade instead of $5,000 and still make, or instead of $1,000 and still make $500, because the moves are bigger and the zones are wider. Are you right? You're probably seeing some wider zones right now, right, Buzz?
Oh yeah. It's you don't see zones like this, or at least like for Game Plan, in the summer. Like this summer is so exciting for me. And we also introduce, like, just because usually the summer has smaller zones. So we have a new strategy with Game Plan where instead of waiting for a 5-minute candle close in a zone to enter, we made a 1-minute candle close. So I was doing it just to brace the doldrums of summer. It had a high probability rate, so I let it out to my members. We've had wide zones this summer. And so, we're making bank over there when it's supposed to be, we're looking at 50%. We're making like 70, 100%. We call our extended targets hotties with these heat zones. It's been really fun. I'm excited for the fall because I'm like, all right, I'm
call them hotties.
I call them hotties. I know marketing is going to kill me, but until they stop yelling at me. But I can't wait for the fall now, because we figured out a way that we can trade wider zones with a 1-minute candle.
More actively.
Awesome.
Going to be awesome.
Yeah, it's pretty cool.
You know what's going to be awesome, Vaz? I'm going to see you at 3:00 this afternoon for our potential fuse trade, and then the trade to close show. Always a blast. It's my favorite hour of the day. And I can't wait to see you this afternoon immediately following the Federal Reserve.
Yes.
Vaz, thanks so much for your time this morning.
Thank you guys so much. It's going to be a fun one. We'll see you later at the close. Bye.
There you have it, everybody. The Pharaoh of the Fibonacci, the vicar of the volume profile. She is the one, the only, Olivia Vaz. Vaz, have a great morning, and I'll see you in a bit. All right, folks. Now we're gonna go a little extra. We're gonna go a little longer today. I'm bringing in Andrew T. Giovinazzi, our director of education and head of option trading. We're gonna talk about ways to set up ahead of the Fed and what some expectations are out of the Fed. So with that, let's bring in our director of education and head option trader, Andrew Giovinazzi. Good morning, Andrew.
Good morning, Mark Sebastian. How you doing? I heard
doing
the Vaz,
good.
I heard you waxing about the Q.
Yes. Yeah, I mean,
yeah.
They look sick.
It does look sick. It's given back. You know, when you think about it, it's just given back a lot of gains. And a lot of those stocks are already down 50% from the highs. So you just look a stock that popped up on my radar a while ago, ADP. ADP is up $70 in the last month or 6 weeks. So I think some money is coming out of this AI thing. Just because I think everybody piled a bunch of dough in there and realized, hey, wait a minute, where are we going to get all the money to pay for all the chips? I mean, there is huge demand, but you know,
at the top of the show, when I was talking at the top of the show, I was talking to Garrett, and I think the conclusion is easy. Would you rather have negative free cash flows in a $1.5 billion company? I mean, you prefer neither, but if you're going to make it let's say a long-term investment, would you put it into the $1.5 billion company that is a small cap, maybe in the Russell 2000, that you see upside in, that has negative free cash flows, or do you put it in the $2 trillion company that also has negative free cash flows? Which direction do you go there? I think it's pretty easy.
I think you start looking at the cheapies.
Exactly.
The cheapy companies.
Now, Andrew, I want to pivot to the Fed, which is why we've got you here. And I told everybody in the audience, I think you have to go back to 2007 to see this much uncertainty ahead of the Fed. Like, we're talking like the infamous Kramer rant when he was going, they know nothing. It was back in 2007, right as financial markets were kind of starting to flash some warning signs. But here we are, and the Federal Reserve, we've got less than 65% odds that we're going to stay the same, 35% odds that they raise rates. There is not a scenario that I see, and maybe you do. There's not a scenario where the market doesn't have to reprice itself one way or the other around the Fed. Either this 64% needs to go into that 35 and we get a big push lower, or we get a really nice bounce. I'm not saying it'd be the end, but we probably get a really nice bounce if they stay stable, and this 35% has to price itself back into no rate hike.
Right. I think that it sets up a little bit more of a binary move than we have had in the past, which is hard to believe because you look at, like, we have had, and I went live yesterday to explain to people, like, we've had a 2% move 1 week after the Fed every time this year, and the rates were telegraphed, right?
Yeah.
Now, all of a sudden, nobody knows what to expect, and I think that's why you're seeing the kind of the skinniness of the market right now, just kind of flailing back and forth. So we haven't had this set up in, like you said, I don't know how long. So it creates, I think, really good potential. And I think the market has a hard time pricing, has a hard time pricing one-day events.
I was telling Vaz, I mean, the last time I saw something like this, she was in high school. right? And I was engaged.
It's been a
Right?
while. It's been a
Yeah.
hot while.
I mean, I was still flirtating. So, you know, she said she sees at a minimum, if we get like some negative news out of the Fed, she's got a downside in the Q's down to 633. To the bottom of the pitchfork that Leisha gave me, we'd be talking 639. I mean, we've got the potential here in the Q's for a 3 to 4% move lower or a 3 to 4% move higher, which then if you look at the S&P, that means basically a 3% move in SPY either way.
And I know, and it sounds crazy that it could happen, but when you kind of have this constant sort of, bad news, negative sentiment, and remember, most company earnings have been very good. Even good, like they reported relatively large revenue. Tesla was kind of, okay, nothing really spectacular, but it has a crazy high market cap. But for the most part, all other companies have reported like relatively good numbers. So you have that still upside as possible. And now all of a sudden, all of the chip stocks are trading at like a 30, 40, 50% discount. So you got, you have a setup for what, for a much larger move than normal when we normally don't have that.
In approximately a little less than 3 hours. Right? Or 2 hours, a little less than 2 hours, immediately following when I'm done with Delta Strike. You've got a trade setup, and it takes advantage of two things, right? The fact that the S&P is at a inflection point, right? We're right at 73.65, right? And we know there's potential for a 2, 3, 4% move, higher or lower coming out of this. And simultaneously, VIX is crossing 20 currently VIX is crossing 20, and there is going to be a VIX move coming out of this. And you've designed a trade that basically, if the Fed comes out with rosy colored glasses and the market decides to take off, you're going to feel pretty good. And if the market
have to hold on to your hats.
Yes. Now, how are you going to do if the market completely collapses? Because this is one of the things I love about your strategy.
We should do it. We should still do extremely well if the market collapses, especially a move down to below 70, 7,300, 7,200. The trade will still make us really good money. I'm looking for at least 50% on it. So it's one of those where, a 20 volatility sounds like a lot until the market wants to move 2.5 or 3% in one day or over a week. Then all of a sudden, it doesn't look like very much anymore. So, and I think that has to do with the summer conditions. Also, we haven't, the market has a relatively low volatility, very summer conditions coming into this. We're only a couple of percentage points off all-time high anyway.
Yeah.
So you have there was a little complacency coming in, and then all of a sudden you have this huge buildup to the news. It's like an earnings announcement, like when Apple's going to announce or Google announce. But the Fed is the earnings.
The last three Feds, you trading this approach, even in a scenario where we already knew what the Fed was going to say, how did you do?
We made like a 44% gain, a 62% gain, and like a 53% gain.
All right.
Pretty good.
So you did over 40%.
Also not having to worry about what direction we were going.
Yeah. So you did over 40%, over 50%, and over 60% in 3 trades.
Correct.
Andrew, with the trade that you're putting on today, what outcomes are you looking for? You said on the downside you're looking for better than 50%. What if the Fed comes out rosy? What kind of a return are you looking for there?
I would like to see 100% on the upside. We'll probably end up getting 50, but if we actually break out above 755 or something like that, and actually hit the highs we had just 3 weeks ago or 2 weeks ago, we'll do very well on that side. So we should expect 50% gains or more. Plus, you get to learn how to trade these events.
Yeah. Well, so Andrew, just doing some quick math. We like to do this thing called expected return. If the market tanks, you're looking for 50%.
Correct.
And if the market explodes higher, you're looking for 100%. So ballpark, you're looking in the around 75. You're looking for a 75% return on this, and your goal is to close this out when? By Friday, Monday?
I would like. I usually we get what we have is like a 1 week travel, like 1 week for the trade, because the market tends to have that momentum and then it sort of dies, where we'll take profits on that side. And then what a lot of times what happens is somebody just has this big relief, and then then we start to sell off again, or just like everybody freaks out, and then all of a sudden they realize they don't have a lot to freak out about, and then we rally again. So I like about 1 week. 1 week is my expectation to stay in.
So you've got what what we used to see in the cartoons, a double-sided heads coin, and you're calling heads.
Exactly.
Like you're like Bugs Bunny.
Heads I win. So tails I win.
Yeah, heads I win, tails you lose. It's kind of what, but in this case, heads he wins, tails he wins. And just going through your approach, when the minutes dropped, you did 191%. As the market ran higher over 6 days, you've done 550%. You have a 96% liability over your 9-year track record. Here's some of the members. Slow and steady two-way trading. I've used AG's method since the 1st of April and averaged 18%. And this is during slow times. No system is perfect, but weekly profit cycles is darn close. The trade made money on the call side. I made over 200%, said Jose. And we're giving now normally weekly profit cycles, which is Andrew's two-way trades, sells at $2,000 a year. We're going to let you try weekly profit cycles for $9.99 for a year. And if you sign up, you get 2 weeks to change your mind. You sign it, you trade this trade, and you trade next week's trade. You get 2 weeks of education with Andrew. And if it's not for you, whether you made money, we're going to give you all your money back. Or if you just want to take a little test ride and play with Andrew on the Fed, $79.
That's not too bad.
$79 for an expected return of for Andrew's expected return of 75%. That sounds like a pretty darn good trade to me. And again, you can call my team 888-872-3301. And if you buy the annual, for 14 days of your membership, no question asked, it is a no-brainer. So if you're not with Andrew in weekly profit cycles, it's time to change that. So you're going to get to join him. And then the next trade releases, oh my gosh, in 42 minutes, Andrew.
Yeah.
So
12:30. 12:30, an hour and 42 minutes.
Yeah, an hour and 42 minutes. So I think our timer's off by an hour.
We got a Chicago time issue there.
Yeah, I think we've got a Chicago time. So you've got an hour and 42 minutes to get in. Give us a call, 888-872-3301. We will take care of you. You will never have anything to worry about here at Option Pit. You can try it at the extremely discounted price of $9.99. That's over 50% off. Or you can try it for a week for $7.99. You're going to love it so much. I'm pretty convinced that you're going to try and get that $9.99 at the end of that $79, and that special will be over. So give the team a call, 888-872-3301, or just click on the link that they have dropped in chat and come and check us out. And it's going to be a lot of fun. And Andrew, I'm looking forward to trading this with you.
Yep, I'm going to start putting the trade up in the service around noonish, just so people can get set up here. But it looks like we're getting a little bit of a move down. Most of the move is in VIX, so we'll see if everybody starts to freak out. Hopefully, I want to get the trade on relatively soon, so people can still put it on. Nothing like
he's going to make
the biggest vol move of the week the day you put your trade on, but
that'll work out for you.
Well, it'll give us
think that's going to work out well for you.
Option that we're looking for.
Yes. All right, everybody.
Thank you for having me, Mr. Sebastian. Everybody, click the link up above. Give it a try. It's a good deal. It's as good a deal as we can make on the service. So check it out. And I'll be live at 12:30 for a half hour putting on the trade myself. So don't forget, I put all my own trades on that.
And he walks you through exactly what he's doing and how he's doing it. So he's going to hold your hand. Andrew as a trader reminds me of my dad holding the back of my bicycle seat when I was learning to ride a bike. He's that patient. And he always catches me when I'm about to fall. Andrew's going to do the same for you guys as we head into this major FOMC event. So click the link, and if you're interested in the annual, give the team a call, 888-872-3301, or just sign up on that order form. All right, Andrew. What do you think? Fed hike or no hike?
I don't think they're going to hike. Mostly because I think the oil situation will settle down somewhat, but they'll be watching it. But I don't think they're gonna hike.
I'm with you, but I'm gonna go hike with a no hike, but telegraphed hike.
Yeah,
which the market
we might go higher. I can see that.
Which we might, we might go higher, and I'm going to be interested to see how we move. But I'm looking for
that would definitely pop the balloon. I think people aren't going to traders are not going to like that, especially the money that has to go into high tech. Everybody's like, all of a sudden, borrowing money is going to be a thing, and that's going to freak people out a little bit. I think.
I mean, if we are right here, 73.65, I think by the end of the day, the S&P is going to be plus or minus somewhere between 150 and 200 points from here. That's how much I think we might move.
Yep, we could erase everything.
Yes. All right, everybody, click that link. Give us a call, 888-872-3301. Andrew, thank you for joining in. I love that shirt. Looks good on you. I hope everybody has an amazing day. Guys, we're here every day at 10 a.m. to guide you through this market, give you the setups we're seeing, give you actionable ideas, and help you through this interesting times, if you will. So make sure you're with me every day at 10 a.m. Better yet, join Garrett at 9:20, and you get a full hour and 20 minutes of market insight every single day. So for Olivia Vaz Nanko, our Pharaoh of the Fibonacci, and Andrew T. Giovinazzi, Director of Education, Head of Option Trading Option Pit, I'm Mark Sebastian. I am your only option. Thanks again for joining us. And as always, thank you, Amin. Thanks, Amin.